Erik Nielsen is the Chief Economics Advisor at UniCredit. He joins us live now from Berlin. Erik, thank you so much for being with us. So you heard Fed Chair Jerome Powell basically saying that, he will not hesitate to continue raising interest rates in this country, in the US, until inflation comes down. How are the markets likely to respond to that?
Well, I think in America, Sandy, it's priced into a large extent, right? There was some fear that they might go a bigger step than 50, but I think it's my assessment at least is that it has been pretty well communicated in America, and it is there's a great consensus that inflation in America compared to Europe is a demand-driven thing. There's too much heat on the economy, and the Fed has to do something, right? So and that differs quite a bit from Europe, where the consensus is a little bit less clear.
Well, let's see what the Dow is doing right now. If we could just pull that up. Last time I checked, it was up about 400 points or so, right? It still is. But we've seen the markets sort of seesawing over the past few weeks in this country. Are investors slowly getting used to this idea that, this is the new normal, that higher interest rates are here to stay in this country?
No, I don't know. I'm in the school of Bill Dudley, who famously wrote, right, that we sometime in the market forget that when the central bank tighten policies, it is to tighten financial conditions. It is to slow the economy, and that comes almost always with some lower asset prices in the equity markets. That's part of a way of taking some of the stimulus away, or even tighten policies. So I'm in the camp that thinks that we would have a leg further down. I mean, maybe not a big one, but a leg further down in markets.
Okay. And just in terms of a recession here in the United States, what are your thoughts on how soon we might see a recession and whether or not we can actually avoid one?
That's a very good question. I don't think the U.S. will get a recession. Europe is in greater danger of that. We are closer to the war, and we are much more being hit. We are hit much harder by the commodity prices. But the point here, I think, for the U.S. is that the world is a really not in a good place now, right? The U.S. has been pushing along pretty nicely because of all the fiscal stimulus and what have you. But if you look around the world, that you have emerging markets certainly looking increasingly difficult. China particularly slowing, probably more than they print their numbers. And Europe doesn't look so good either. So at a time when we are coming in here with some withdrawal, or maybe substantial withdrawal of stimulus in America, maybe on both fronts of fiscal and monetary policy, you will certainly see a slowdown, but I don't think the U.S. will hit a recession. But it could be close, but I doubt it.
And just in terms of China, since you touched on China, we're seeing China's zero COVID policy having a massive effect when it comes to demand. In fact, not a single car was sold in Shanghai in the month of April. That's incredible. How is all of that impacting the global economy, do you think?
It's big, right? And I think that there's a big possibility that it's even bigger than the numbers they print. Remember, China has first big structural issues in terms of growth, the demographics, and that has been a running issues. Now we don't even talk anymore about the big other break they have, which is the real estate crisis, the financing of the real estate, which is where they are doing their best to hold it, but the leverage in the system in China is huge. I mean, if you think back to the crisis we had here in Europe, and you remember Ireland and Southern Europe, these were peanuts compared to the numbers that China has now. And then comes on top of that their very peculiar handling, or tough handling, of the COVID crisis. And you said exactly the pictures we see from Shanghai and others. It's absolutely devastating. So the numbers are. We economists have always thought that the Chinese are smoothing their GDP numbers a little. No, you don't get such quarterly numbers quarter after quarter, and that's okay, whatever. But now I rather suspect that they're smoothing them a little bit more than they should do, maybe for political reason up to the Congress at the end of the year or something. But that's a guess on my part. But it doesn't look good.
You're low on trust there. All right, Erik Nielsen.
I am low on trust.
Live for us there. Thank you so much.